Hey everyone, welcome back to Corporate Decoder. Today we're diving into a particularly interesting Form 8K filing. It's from a company that might be hitting the brakes on some of its own stock, but are they really stopping or just slowing down for a better turn? Let's unravel what Mobileye Global is up to. You know the drill. If you appreciate simple insights on corporate filings, subscribe and join our Discord community, link in the description. Scrollers of report dates of earliest event reported. Scroll, this report came out because of events that happened on July 7, 2025. It's all about Mobileye Global, a company focused on self-driving car technology. The big news here is a secondary offering, which means Intel, who owns a big chunk of Mobileye, is selling 45 million shares of Mobileye stock. They might even sell an additional 6.75 million shares if the underwriters choose to buy them. Now here's where it gets interesting. Mobileye is also buying back $100 million worth of its own shares from Intel. This buyback will only happen if the stock sale goes through. It's like saying, we're selling some shares, but we also believe in our company enough to buy some back. Basically, the company entered into an agreement with Intel to buy back those shares. Seems a little bit like moving money from one pocket to another, doesn't it? Just to be clear, Intel is Mobileye's biggest stockholder. If you want to know more about their relationship, the company's proxy statement from April 2025 has more. Always good to know who you're dealing with. We need to move on to the juicy stuff, the numbers. We'll get to it in just a second, I promise. We got to scroll a bit further. There's another thing happening. Intel is planning to convert 50 million shares of Class B stock into Class A stock. This will only happen if the stock sale goes through. They're doing this to increase the number of Class A shares out there, which is the kind of stock the public can buy. So it's like tidying up the stock structure. Now for the part where Mobileye shares some extra info with investors. This is usually very important to read because it's them talking directly about the company's state of affairs and expectations. First off, the company notes some geopolitical concerns. There was a conflict between Israel and Iran, and while they don't expect it to hurt their business in the short term, they're keeping a close eye on things. Geopolitical risk is always a factor, especially when a company has operations in a region dealing with conflict. They've also made a deal with TSMC, a big chip manufacturer, to make some of their products. This is smart because it gives them more options for getting their products made and more control over their supply chain. Scroll preliminary estimated results for the 3 months TAS ended June 28, 2025. Scroll for all right. Let's get to those preliminary financial results. Remember, these are estimates and could change, but they give us a good idea of how the company's doing. For the 3 months ended June 2025, Mobileye estimates revenue between $502 million and $506 million. Last year during the same time frame they made only $439 million, so this is good growth. But it's important to know that although they have an income, they're still operating at a loss. The estimated operating loss will be around $76 to $82 million compared to a $94 million loss the year prior. So it's getting better, but still negative. There's also something called adjusted operating income, which is a non-GAAP measure. Without going into too much detail, this is basically what the company thinks it's earning when you take out some special expenses. Its adjusted income paints a rosier picture, between $98 and $104 million estimated for this quarter versus only $79 for Pakt Seven Nordi City. The company uses adjusted operating income, a non-GAAP financial measure, to make smart decisions. Non-GAAP just means they are making up their own system of calculation. They say this measure helps them to strategize and make business plans. It also lets them see patterns and judge how well they are doing. They think this is useful for investors because it provides greater transparency into the metrics they and Intel use. To calculate this adjusted thing, they add back in expenses like the cost of writing off old assets, intangibles, and stock-based compensation. Mobileye says revenue is up because they're selling more of their IQ chips and customers are buying them up faster than before. They're still being careful because things like tariffs and the economy could create issues. This is the same for all companies these days. Remember, those numbers are just estimates and might not be exactly right when the final numbers come out. All these numbers are management's responsibility. The company's independent accounting firm hasn't checked them yet, so take them with a grain of salt. The document includes some exhibits, including the share repurchase agreement. The share repurchase agreement, dated July 7, 2025, by and between Mobileye Global Inc. and Intel Overseas Funding Corporation, is there. Finally, the filing has a section on forward-looking statements, basically saying that what they think will happen might not actually happen. There are many important factors that could change these forward-looking statements, including, for example, the economy and future customer demand. Adverse conditions in Israel also are relevant and can disrupt their business specifically. Okay, so let's put it all together. Is Mobileye a good company? Mobileye is in an interesting position. On the one hand, they sell more product every year and their production cost and organization seem to be becoming more efficient, resulting in better margins. On the other hand, they're still operating at a loss overall, so they are not sustainable at this stage. While the loss seems to be shrinking every year, they will continue. The related party nature of the agreement is a bit of a yellow flag, since we always have to wonder if they are just doing things to pump up the stock at the expense of the real business, but they do explicitly state that all decisions were made by disinterested parties. Their reliance on production capabilities in Israel is also cause for concern. If there are any serious conflicts in the area, something they highlight themselves, they can take a serious hit on the revenue side. Overall, I'd say Mobileye is at a crossroads. The technology is promising, sales trend is positive, and they have some big partnerships, but they need to turn that growth into actual profit and fast. Otherwise, they risk getting stuck in neutral. Alright, that's our take on Mobileye's latest filing. What do you think of these numbers? Are they going to get to profitability? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching and see you next time.